Hello traders, the title of the video is how to use Fibonacci retracements to pinpoint best trading signal. Alright, let's get started and keep this video very short. Alright, so very often what we have seen is that the price, the financial instrument may go up, alright, and then it will pull back, alright. So a trending phase followed by a correction. After the correction, traders who are expecting a new trend or a more correction or the correction to be prolonged. So the first reaction, price went up and then pullback. The pullback is the first reaction, which is a profit taking, all right? After the profit taking, the first reaction of the profit taking, first leg of the profit taking, you see here, price went up from here all the way up here, and then it pulled back all the way here. If you were here, you would say here. All right. So you're going to go one step at a time. If you were here, you would say here. Now we are here. So, all right. So price went up and pulled back as it did here. Professional after that will apply Fibonacci retracement to the corrective phase, this section here, and they are watching the level of 50% Fibonacci retracement level. If you are in a financial market and you are not aware of that, you can get into trouble. All right, you need to know and remember all the time that if a financial instrument goes up and pull back like this, professional always apply the 50% Fibonacci retracement level of the first leg of the correction. What is happening is that there was a priority to bullish signal above that 50% level and priority to bearish signal below it. As the first leg is completed and the price starts going up because they're expecting a new trend, as the price reaches that 50% level, there will be orders to sell in that zone. The opposite is also true. In a downtrend, price goes down, and we see the first leg or the first reaction of the corrective phase. Professional will apply Fibonacci retracement to that corrective phase, and again they will highlight the 50% level. If the price start pulling back because they are expecting what? Okay, pull back to the 50% level. Okay, they are expecting a new bullish trend. If it reaches the 50% level, there will be orders to buy. All right, so understand that in the financial market, and is that the 50% level is a critical level for those who are trading that financial instrument because it's all about market sentiment. But talking about how to use Fibonacci retracement to pinpoint best trading signal, here it comes. Most of the area, most of correction, most of the Fibonacci traders, most of the technical traders will only apply the Fibonacci retracement to the first leg of the corrective phase. What I want to share with you today, which is a small trading tips that you can apply to pinpoint best trading, okay, a signal is this. When you apply the Fibonacci retracement to the first leg of the corrective phase, as we did here, okay, that 50% level, as we apply here in this section here, that 50% level is here. Going to color it now into orange, all right? So that's the orange line there. So anytime the price is going up, remember there are orders here to sell. There are orders here to sell, all right? Doesn't mean that you must sell by all means here. It's just if you come to this level and you see a bearish trend setup or a weakness, or the trend line is kaput in that zone, all right, right below retest, okay, you want to give priority to bear signal as the price approaching that level. If it breaks above and finds support or form a higher low, then it becomes more bullish. In all cases, we want to use a top-down trading method. But I have not finished here. What I want to add to that, so that 50% level is right there. That's the orange line there. What I want you to do from today is that apart from applying it only to this first leg of the corrective wave, okay, corrective phase, I want you to apply it also to the trending phase. So there was a trend, here it is all the way up there. Apply the Fibonacci retracement to that trending phase. I've done it already, and highlight also the 50% Fibonacci retracement level of the trending phase. So the line that I'm putting on my chart now is the 50% Fibonacci retracement level of the trending phase. So we have two 50% Fibonacci retracement level. The zone between those two 50% Fibonacci retracement level is a hot spot trading zone. This is what I want to share with you today, because most traders will only draw the 50% Fibonacci retracement level for the corrective phase, but they will ignore completely the 50% Fibonacci retracement level of the trending phase. Draw both and monitor the reaction of the price in that zone. Sometime you'll see that the price, especially if you are day trading, you may notice that sometimes the price will consolidate between the 250% level before breaking above or coming down. So suppose, all right, suppose, my friend, all right, sometimes what is happening, the way it is now, you can see that most traders are watching the orange line. Okay, they are watching the orange line. So sometimes they probably do something like this. We will break above the pink line, which other traders are not aware of because they did not draw the 50% Fibonacci retracement level of the trending phase. So probably break above the pink line, hit the other 50% level, pull back and retest the first 50% level. And as it's doing that, as it's coming down like this, people are not aware of the pink line. So they continue to sell, only to be kicked out because the price will break above one of the 50% level, find a support, and then start going up. So draw both and be aware of both, and okay, pinpoint the best trending signal, okay, in that zone. All right. Sometimes the 50%, now you see that the 50% of the trending phase is below the 50% of the corrective phase. All right. If it happen to be the opposite this way, which means suppose the trending phase 50% is above the 50% of the corrective phase, because all traders are watching is the orange line, which is the 50% Fibonacci retracement level. So sometimes the price breaks above it. It breaks above it to retest instead the 50% of 50% Fibonacci retracement level of the trending phase. Because it breaks above the 50% Fibonacci retracement level of the corrective phase, bullish traders will start buying aggressively here. All right, but it's a trap because there is another 50% here. So there is a group of traders that have placed orders here to sell, and there are another group who place orders here to sell. So orders are placed here to sell, orders are placed here to sell. Those who only draw the orange line will place orders somewhere, a few people above it to sell. All right. And as those people are taking out, everybody says becoming bullish, but they forget that there is another group of traders that are selling here, and it can become a bit messy. So just be aware of those 250% Fibonacci retracement level after a trending phase and correct the first leg of the correction. Draw those 250% Fibonacci retracement level and monitor the reaction in those areas. All right, this is what you need to know to pinpoint the best trading signal. So as I've done it now, I will just leave it there. Hold on, please. Okay, I'll leave it there like that. Okay, there are more to this. We can do more with this one because you use the 50% as a psychological price level, dividing the chart into two zones: the bullish zone above and the bearish zone below. But sometimes we can do something else. All right, this is be a little bit more creative. We can do exactly the same thing between two 61.8% Fibonacci retracement level. So the most important Fibonacci retracement level in this case is the 50% Fibonacci retracement level. But I'm just adding to that. Just be aware. Other traders are also watching the zone between the first 61.8% level and the second 61.8% level. To color it now into orange. Because if you apply the Fibonacci retracement to the trending phase and also to the corrective phase, you will have 261.8% Fibonacci retracement level. You see now? So just be aware that just be aware of those kind of trading tactics that the Fibonacci traders are doing. The computers are aware of it. As a human being, as a retail trader, you want to be aware of what's going on. Do not be fixated in only drawing Okay, the Fibonacci retracement level of the corrective phase alone. If you don't want to draw it for a trending phase, just be aware of it, and that will help you to pinpoint, okay, a best trading, okay, a setup. All right. If you have any question or suggestion, put in the comment section, and in due course I will be recording another video to answer your specific question. As always, when you learn something new for the first time, the best approach, play with it, try it, use a demo account. All right. Maybe it doesn't make any sense to you now. You say, oh, George, this is another blah, blah, blah. I don't want to know. And then later on, have a look again. All right. Try it and see. Maybe one day you'll notice that, this thing makes sense. But it doesn't guarantee that always it'll work. But you just want to know, because you want to know how other traders are using the Fibonacci retracement level and how they are drawing their Fibonacci retracement level for the trending phase and also for the corrective phase. So you do not draw it only for the corrective phase. If you find this video useful, let us know by giving us the thumb up. I would like to thank Trader for rating our video. I can see a lot of interaction now at 24 Stock Trader. It's very encouraging. All right. So if you like it, let us know, please. If you think that it's a blah, 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 let us know. Mark it down. If you find it useful, feel free to share with your friend on Google+, on Twitter, and also on Facebook. Have any comment, constructive comment, all right, put in the comment section. I always read the comment, and in due course, I will be recording another video. Do you have a better way? Do you know a better way to use Fibonacci retracement? Put in the comment section, and we'll look at it, and we may record another video about Fibonacci retracement trading. This will conclude this discussion today about how to use Fibonacci retracement to pinpoint best trading signal. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about how to use the Fibonacci retracement to pinpoint the best trading signal. When we identify first the setup, then when we apply a top-down trading method, if there is no signal, there is no signal. If the signal fails, close the trade. Happy trading to you all, and speak to you soon.